Good morning, everybody. Today, it's the 23rd of March. It is a Monday, and markets seem to be up for now. Now, I just saw in the comments, someone is asking me, why did I use the term taco? It's a default term of the mindless. To a certain extent, yes, I agree. But at the same time, that's why I have a question mark at the back. Taco? And the reason for that is really because, at the end of the day, we don't know what Trump is thinking. We don't know what the situation is like, which is exactly what the markets are trying to price in. I think right now we are seeing a recovery because it is de-escalation. Now, to what extent of a de-escalation, we do not know. For all we know, Trump is just buying time for the ground troops to move into position. That's one possibility. Or another possibility is that he really is, trying to negotiate something because he has seen the impact it has on both the oil prices as well as the US stock market. So if you actually take a look over here, let's just do this bit by bit. If you take a look at the S&P, we literally bounced right off the uh the 647 line, I guess you can call it that, last week around 647, right? And then that was the 0.23, that was the 0.236 on the FIB retracement, and we are right here. So the thing about the S&P today is that it's not all coast is clear, which is why I said Trump taco question mark. Because at the end of the day, you do not necessarily know what he's thinking. I think people like to label him in a way that he always goes back against what he says, but he seems to think he has a greater plan. Now, for me, I really do not know. Either way, my job is to try and make sense as best as I can about the information that we have, and we adjust accordingly. And so what we are seeing today is, yes, despite this bounce of the 0.236, at the same time, we are not able to get past the 200-day moving average, stuck here in the 660 range. If I turn on the volume profile, you can see that there's a large volume shelf over here at around 683. Again, I think this is another area of resistance, which perfectly lines up with the 50-day moving average that we would have to get past. So I think to be celebrating right now is a little bit too early. And I think that I think still more caution is needed. So definitely today, when you take a look, the covered calls are doing very well. And I mean, I guess for me, in my particular scenario, I thought I would be assigned some of the cash account puts, but apparently not so. So later on, we will dive into the portfolio. We will see what's happening over there. Good morning. Good morning. So I hope that addresses your question, EWC. Yes, fish fage. Yes, he tacos, pratas, he flips flops. I think when it comes to Trump, he really divides opinion. I have friends who like completely hate him. They really dislike what he's doing. And then there's also another group of friends that that think that he has everything under control and that all this is just a show and then he has this greater plan at play. For me personally, rather than try and debate which side of the fence Trump is on, all I care about is how does the sticks move due to what he says and how we can make money from that. Right, Lawrence, exactly. Sell calls, buy protection below the recent lows. Something is wrong with my computer. The fan is extremely loud. I hope we do not die today. All right. So I think that's where we find ourselves today. S&P slightly, but again, struggling at the 200-day moving average. Let's see whether we get a close past it. I guess you can say that we have broken past slightly. Okay, I think we are seeing a similar trend on the Qs. If I turn everything on, and sorry, this is taking a while to load. I'm not sure why. Yep. So similarly, we are seeing a volume shelf over here around $600. Again, we are seeing a similar trend in the Qs, rejecting off the 200-day moving average. So I think by and large, markets are all in the same kind of position where we are all mostly in the wait and see mode, which is exactly why we are, tend to be basing around the moving averages, basically waiting for what's going to happen over the next 5 days. So I do expect a lot of volatility in the next 5 days. Since Trump has said that he is going to give 5 days to reach a deal with Iran, then I believe at least for the next 5 days, we should see market try and retake this 200-day moving average. But I don't think we will reclaim the 50-day until we really see the end in sight for whatever happens with this conflict in the Middle East. All right, so let's take a look at the news before we dive in. So you can see, right? I think he just gave an interview on Fox, Trump himself, where he said that because the communications are broken down in Iran, they can't communicate with each other, but they have spoken to someone. I think the worry over here is that nobody has really given a name, right? The Iran state media never gave a name when they said that talks didn't happen. Nobody made that statement. They literally just say IRGC state media. And then when Trump was talking to someone, he just says it's some guy, someone that is important. So again, there's a lot of ambiguity around who they are talking to and who exactly is trying to make a deal over here. But what we are seeing is that the prices of oil is coming down. I believe Brent crude is down to around $96 per barrel. The last time I checked, has that jumped back up again? Let me take a look. So I know this can be pretty emotional times, but that's why we jump on stream, listen to people talk, and let's see what happens together. So I can see oil is down. I think this is WTI. Is that oil is down around 8% today? So that's not too bad. Let me see Brent crude. So Brent crude, okay, we have rebound. I wouldn't say it rebounded slightly. It's still down 8.3%. It's around 90. Yeah, it's still around $97 per barrel. So that's fine. Is it 90? Or is it past 100? I'm seeing past 100. Let me take a look. So WTI crude is down 8%. It's $89. But for Brent, let me see. Yep, I hope all of your portfolios are up right now. So anyway, back to the US and Iran news. Trump says the Strait of Hormuz is going to be reopened soon under joint control with the US. Iranian media denied negotiations have taken place. We have talked about this. Oh yes, Brent crude fell as low as $96 per barrel before recovering again. So I think we saw Israel came out with a statement to say that at least for them, they're still going to continue in this engagement with or without the US. But I think as long as the US can take themselves out of the engagement, it basically diffuses the entire situation. Then this becomes an Israel-Iran thing, which I think it's not as big a deal as compared to if US gets themselves involved. Let's see. All right. So I believe that's all. I think oil prices are going up pretty. Yeah, because I'm if I'm not mistaken, I saw this news where someone from Saudi said that oil prices could go up to 180 if the conflict drags on to April. Let me see. Right. Okay. So over here, there was this article that came out last week, towards the end of the week, where Saudi Arabia sees a spike to 180 if the oil of per barrel of oil if energy shock persists past April, and I think that was one of the reasons why the stock market was down pre-markets, especially because we were starting to see the end of the 48-hour timeline that Donald Trump actually gave Iran to basically open up the Strait of Hormuz. So up to now, technically, it's not fully open. But since Donald Trump says that they are in talks, we really do not know. I think right now, at least for me, I'm waiting and seeing whether or not we are going to see oil prices come back again should the conflict continue to escalate. So with that, let's jump in to look at the portfolio. Just give me a minute. All right. Earlier on, I believe Muddy Waters came out on Squawk Box to talk about the SoFi short. Did anybody listen to that? I didn't see it, and I'll go and find it later on. But apparently, I heard Muddy Waters saying that they are going to go on Squawk Box to talk. I'll try and find. Yeah, basically over here. So Muddy Waters themselves said that they were going on Squawk Box to speak about it. Hi Bob. Hi MDA. Yeah, no worries. Earlier on, I was just talking about Trump's decision or Trump's announcement that he's speaking with Iran. Someone asked me why I used the word taco because it seems to be a very brain dead word. And I said that basically, because at the end of the day, we really do not know what he's trying to do, whether or not there's a bigger plan at play where he's buying time for a larger engagement, or is he really trying to de-escalate? We really don't know, and that's exactly what the markets were pricing in. So we saw how the SPY and the Nasdaq, despite recovering from the lows on Friday, they were still struggling at around the 200-day moving average. And of course, if we do have this 5 days kind of like a partial ceasefire, at least towards the energy infrastructure, then perhaps we could see us retake the 200-day moving average. But for a real recovery, I think the markets are looking out for more than that. All right, so okay. So they are not short so far, but they hold puts. All right, so they liquidated most of their position, I guess. I'll have to go and take a look at that video again. But they also spoke about basically how AI will disrupt banks, and I think the I think the assumption that AI will disrupt banks is assuming that banks will not use AI. I think SoFi is integrating AI into their ecosystem, as well as moving into expanding their usage of the blockchain. So I think they will be completely fine. The only thing that I'm not very sure is that because SoFi doesn't use artificial intelligence to do their underwriting, they believe they can do it just as well using yeah through the old way of underwriting. I do not know whether or not that will hurt them in the long run, but at the moment the results itself doesn't tell me that that is the case. Yep, up 3% today. So earlier today, I actually posted on Instagram about my portfolio, and I literally posted a couple of minutes before the market opened. And at that point in time, it was about maybe half an hour before the market opened. And at that point in time, basically, it was right at the point where Iran just announced that we did not have talks with Trump. Trump is talking nonsense, and the market fell back. So the portfolio value is 98,000. But if you actually take a look at the just a couple of minutes after market open, I believe we are back above 100,000. Let me be back above 100,000 per share. But close. Okay, earlier on, I was back above 100,000. Now we are like 99,700. Where are we? Give me a second. Yep. So we just fell below the 99, below the 100,000 mark again. But basically, I think what is impressive with today's market is that how strong we are seeing the reversal. And so I think a lot of the negativity that we are seeing in the market really it boils down to the conflict in the Middle East. And this tells me that basically, if the conflict is resolved, the markets should see a way to trend back higher. And if you take a look since the start of this portfolio, I guess this is based on last Friday's price. It's not as accurate right now, but as of last Friday, we are just down around 1.3, 1.4%, but the overall S&P is down around 5%. So we are doing around 3 to 4 times better than the markets in general, right? Compared to if you were to buy an index. So that's not too bad. Hey Claude, buy me a bank charter. I want to sell loans to my friends. Yeah, I think the regulation aspect of it, I think what they are saying is that, they can replicate some of the features that SoFi has. But I think if that is the case, they already have competition that is doing that, which is called Robinhood. And I think Robinhood is, I mean, you have to say, at the moment, seem to be innovating faster than SoFi. Now, at the end, but when you actually take a look at the numbers, they're actually still fairly close. Because what Robinhood does is that they roll out products very quickly and then they have a long ass wait list. So there are people who are still waiting to get into the Robinhood. I believe the credit card or something like that. There's still a long wait list, and the amount of credit cards that they release is not much faster than SoFi at the end of the day, right? So if you take a look, let's talk a little bit about what's happening in the account today. Now, if you take a look at the portfolio, let me move over here, make this a little bit bigger. All right. So you can see the first position that we have over here is our Amazon cash account puts. Today, it's at around 77 cents with a diluted cost basis of $2.95, which we receive $295 in premiums. Now, what I'm going to do is that, although every day I will be looking at certain specific positions within the portfolio, but I guess every Monday, what I want to do is talk about the plans that I have for the portfolio in the week ahead so that you know what I'm looking for throughout the week. So one of the things that I am considering doing this week is to close some of these cash account puts early and just go and buy the positions, or to at least just roll them out a couple of weeks later. Because the reason is next week I will be away for a couple of days in Vietnam. I will only be on for one day, which is on Monday, and then I'll be away from Tuesday to Thursday. And I believe, okay, I'm not. I believe I'm not too sure how much time I will have over in Vietnam to be keeping track of the portfolio. So I would rather have the cash account puts aside at expiring at a slightly later date rather than on 2nd of April, in case some of them gets assigned, which I might or might not want to, because I'm slightly over collateralized. So if you can see, we have around $71,000 in cash in the account, but I think the total collateral of the account is around 75,000. So that's that. So Amazon, okay, received 270, 290. Currently, it's around $74. Robinhood, similar. I think this is one of those positions that I actually hope they get assigned, but I believe at $70, it is only yeah, where I want to start the position. I believe they can go down slightly. I believe around to the 60 something, maybe low 60s, high 50s, if the market does get worse. And I think I'm a buyer over there at those levels. Iran, this is one of those where, again, right now I can call this a cash grab. Even if I don't get assigned this, I'm perfectly fine. I mean, right now we're up 33%. I can return these options and make it out with $145 profit. So that works out perfectly fine for me. Nvidia, another one of those companies that I don't mind buying. I thought I would be buying Nvidia based on the price action last Friday, but unfortunately, this has since bounced back up. So I am pretty tempted to just open a position, right? What is Nvidia trading at today? Nvidia today, I mean, everything is up. It's at 178. Again, I think it's trending along with the markets. We're actually seeing the exact same trend with Nvidia as we are with the markets, struggling at around the 200-day moving average. So I think there is nothing much else to do rather than wait for this Nvidia position. SoFi, after the short report, since then, it has recovered pretty nicely. Cost basis 1796. You can see right now, current price 1730. So it's not too bad. Actually, you know what, Lawrence, I really do not know whether or not if you skip the ads, whether I make any money from the streams. But honestly, the I don't really get much from the stream. So even if you skip the ads, it's perfectly fine for me. Yeah, I just turn them on because it is yeah. Where when I was learning about this, I was told that YouTube tends to promote your video more if you turn on advertisements because it is a video that they can earn money on. So it's just more of aligned incentives. For me personally, I mean the amount that comes into me through YouTube, it's like a couple $100 every month. It's really not substantial, so it doesn't matter. Right. But thanks for asking. Zeta, again, this is one of those. Wouldn't mind owning the position at 16. Um, right now, I'm like I said, I'm really not in any urgency to buy. Oh, see, portfolio value past 100,000 again. But personally, I'm really not in any urgency to buy because the markets are still showing weakness. I rather buy slightly higher price points where I'm sure the market trends is going up. We added a new position to the portfolio. If you can see right at the bottom, we bought ETHA. I've explained it on X over the weekend that the reason why I've chosen to buy ETHA is primarily because the option chain, at least there's some liquidity there for me to roll some options. If I go with ETHB, yes, I know because that is staked, technically the returns should be better. But right now, because I cannot run any option strategy on that, the option chain is still fairly bare. I've decided to go with ETHA from now, and I'm not opposed to rolling out of this and going into ETHB in future. Right, but right now you can see our cost basis for ETHA is 1605, and right now this is this has recovered to 1650. So if I take a look at our watch list. So far it's up 2.7% on the day. We are basically we're basically at 1730. Amazon similar. We are at 212. This was a very quick recovery if you consider we were at 202 in the pre-markets. Right, I would have loved to have gotten Amazon at 202. Ethereum 1650. There is a part of me that want to just go and buy Amazon right now. But again, like I said, I rather buy Amazon when I have a bit more confirmation that the markets are going to recover. Hood has since recovered from the pre-market lows of around 67.90 all the way up to 73. This is one of those companies that I wouldn't mind buying a little bit early. Zeta Global 1750. Grab has recovered. Oh, I think Bob was asking me about the news about Grab acquiring Foodpanda in Taiwan. I'll talk about that later on. And then Zeta is recovering pretty well. So you know what? I'm just gonna leave this Zeta position. Iran. This Iran position. I'm just gonna leave it for now. I'm hoping that this doesn't get assigned. I'll get to keep all the premium, and then it'll be a cash grab for me. If I want to get exposure to the semis, to the AI space, then I would rather do that through Nvidia. Thanks, Lawrence. I mean, these kind of things take time. I don't expect to grow a community. I mean, it takes time, and I think that nowadays, yeah, everybody's doing this, right? So I only can do what I can over here. Andy, what covered calls are you selling for BMNR? Nothing has changed in the BMNR position. I am still holding the $27 and $30 BMNR calls out to April sometime. Let me take a look. Let me take a look. Yep, I have 2nd of April, $27 BMNR calls. So those will likely expire worthless by then. It's around 12 cents right now. And I also have $30 BMNR calls. Should also expire worthless by then because I do see that there is some resistance at $24 for BMNR. And again, if the market doesn't trend up, I don't think we will see such a high push towards $27, $30. Usually with BMNR, because I know they are so volatile, I tend to sell my options at a 0.15 delta. So there's a lower chance of them getting assigned. Today on BMNR, I can take a look. Give me a second. I haven't even taken a look at the options chain on BMNR today. Okay, if I take a look at BMNR, you can see. So it depends on your strategy. I do two different kinds of strategies, and I think it really depends on the kind of volatility I'm having. So if you see right now, the implied volatility is more or less, very similar to the historic volatility, then I tend to go a little bit further out unless I can capture more volatility in the short term, right? But if I can't, usually I like to go 40, 45 days out. And if you take a look, let me see, BMNR at 46 cents, 50 cents, let's call it 48 cents. So it depends on how many BMNR you have. If you want to be extremely safe, like I said, I always do the 0.15 delta, which is around here, $30 on the 1st of May, and then you can just close it just before then. Go live around 11. Oh, so that means right around this time. I also do realize that, once it passed a certain time, then more people start to come in. But yeah, right now I'm just doing the 3 times a week. When I'm back from Vietnam, it'll be daily, and then we'll adjust accordingly, because I plan to go live on some like mornings Singapore time, which is night for the folks in the US. And those will be more general market discussions rather than talking about portfolio. So there'll be one day dedicated to like Grab and C Limited and things like that, as well as Singapore companies. And then there will be another day that is dedicated purely to talking about whatever's happening in the US markets. Yep. Oh, and Bob, I've taken a look at your thread on X. I will reply you sometime this week when I get the time. But by and large, I think the thread was good. It gave some very good insights. I think there was a little bit too much focus for my liking around the CEO buying the shares, because at least for me personally, I don't see the CEO buying as a very huge signal on whether or not the company is well and good. I thought your explanations over some of the other fundamental parts of SoFi's business was good, and would actually like to see you expand a little bit more on those other areas. So I actually thought that, yeah, the CEO part was I think there's a lot of interesting things that people wouldn't have known, definitely. But if you are, I think it depends on what is your objective for writing that post. Because at the end of the day, if you're trying to reach out to more people to let them know that SoFi is a fundamentally good company, then your other segments, the second, third, fourth, are a little bit shorter. But you actually gave a lot of good insights in those segments, which you could expand a little bit further. But of course, the CEO one does give it helps sentiment, but it doesn't drive the fundamental story for SoFi. But I am reading it; it's really good. Yep. Okay. So this right now, if you ask me, if I close my if I close my covered calls on BMNR today, I would go out and sell the 40-day covered calls on 1st of May. Right. And then usually what I tend to do is that I close them maybe 1 or 2 weeks before expiry. If I do such long dated cover calls, sometimes I do the shorter term ones. So for example, I might do 10th of April if it gives a good premium. So that will be around uh $26, $27, right? You're getting around 26 cents. So from there, if you are chasing yield, in a sense, you want a higher yield, you get around 26 cents 2 weeks in a row, assuming the volatility is the same. You get around a 52 cents yield per contract compared to what you are getting if you just do the further out covered call where you are getting 46 cents. So I think if you are chasing after yield, you can go the 2 weeks route, but usually that's a lot more volatile. There's a higher chance of assignment. So it depends what you are looking for. If you're like me, I'm like on the markets every day. This is practically my job, then perfectly fine to do 2 weeks. If you are someone that wants to set and forget, I would suggest go a little bit further out in terms of your time and then close it when you have a couple of weeks to spare so that you at least realize most of the theta decay. No problem, Bob. Okay. So with that, okay. Anyway, you asked me to look into Butterfly, right? So Butterfly Network, I know they make this some handheld single probe ultrasound system. But again, because it's in a healthcare space, I am not. Well, I tried to read up a little bit about the tech, and yeah, I think for me it's a little bit hard to understand the market demand for it, because I'm not particularly well read up in the medical space. But I know that the fourth quarter was the inflection quarter, which was quite bullish for them, definitely. Right? It was a record quarterly revenue, if I'm not mistaken. It's like growing at 40% year over year. So 31 million. So it is still a small company. If you are someone with expertise in the medical field, or you have a better idea than me about this sector, then that might make a very good small cap play. But I personally just got out of HIMS because I wanted to concentrate my focus in the tech and finance space. So that's why for me, I wouldn't open a position in Butterfly, not because of any fundamental problems that I see. At least on the surface, they look perfectly fine. But uh, but yeah, for me, I just want to keep my focus on the tech sector as well as finance. So I believe this was also the first quarter that they are operating cash flow positive. So I guess that's why they're up by that's why they're up by 8%. Yeah. So I think for a company like theirs, with I think gross margins, I believe in the 60% range. I think that is very healthy for sure. So yeah, I think it's an interesting company, especially if you have expertise or a bit more knowledge in the medical industry, because I think everybody have their own circle of competency. Uh, and previously, I thought it would be nice to expand my circle of competency, but rather than expand out to go try other circles, and I was told to focus on two, three circles and then go deep and understand the supply chain, which is what I'm really trying to do this year. And which I guess it helps because when I do some of these research for the portfolio, I end up having to do that as well. But thanks for the recommendation. I enjoyed looking into it. Partnership with Mid Journey as well. Yes, definitely. All right. So with that, that is the portfolio. Give me a minute. Where's my screen? All right. So right now, I think for me, I just let me take a look at some of the option chain in for the portfolio, and then I'll see what I want to do. Because if you ask me, the the one that I'm most keen on closing early is actually the Iran one, to take some of the collateral off the table. But it's only around a 40% profit right now. So I want to be a little bit greedy and say I can wait, because with Iran, we saw a pretty strong bounce off. If I'm not mistaken, we did see a pretty strong bounce off. Let me go to the daily candle. Yeah, we did see a pretty strong bounce over here of the 50% FIB, so at around $41. And I think we have said previously, this area around $41, this has been pretty strong support for a while. And I think right now, the 200-day moving average is catching up, which is basically right where we saw our cash secured puts. Like the 200-day moving average today is around 37.80. Our cash secured put is at $38. So I think based on that, we should be pretty safe. Again, like I said, I am not fully convinced with Iran. I know there's a big spat on X between people who likes Iran and people who like Nebius. I tend to fall a bit more on the Nebius camp than Iran right now. Uh, yeah, so to me, this is really just a cash grab. And I thought that if I really wanted exposure in this space, perhaps I can, go for Nvidia. I wouldn't be opposed to just buying 100 shares of Nebius over here, because 100 shares of Nebius is basically the same as buying 300 shares of Iran. When will I exit out from BMNR? Not anytime soon. I just got into the position last year, August. So not anytime soon. Yeah, I will trim some at certain price points. But when I say I'm looking to trim, usually I trim once the position close to doubles. And depends on the momentum. Like for Palantir, I trimmed it when it doubled. For SoFi, I didn't trim it until it 3x, slightly more than 3x. But that's also because I held it for an extremely long time. So it does depend on a number of factors, like how long I held the position and compared to the momentum as well. So with Palantir, it wasn't a very long, wasn't as long as SoFi. But with SoFi, because the hole was long, I didn't trim it at 16. I let it run all the way up. Trimmed it around 27, 28. I believe I posted on X last year when I took a trim in that region. And so similarly for BMNR, right now my cost basis, the cost basis on screen, it should be around $38. The adjusted cost basis when you account for the premium should be around $36. Which means I don't plan to trim until at least the 70s. Even then, it is a trim. When I say trim, usually I just exit 10 to 20% of the position. And then for the other 80%, I will let it ride up even more. It's basically just to de-risk that position a little bit. So like I said, it does depend on the momentum. It does depend on, sometimes basically what I do is I use the FIB extensions to try and find certain price points to trim. Once they usually touch the FIB extension, I can't remember what. Sorry, you know what? I'm really not a technical analysis person. I can't remember. I just know it's 1.618. Once you reach that level, usually I will trim at that level. How much I will trim? Usually 10 to 20%. But like I said, no hard and fast rule. For me, I look at momentum. I look at how much capital I put in the first place. This is a fairly sizable sum of capital into BMNR, more than I had intentionally planned to put. Reason being because the stock really got to quite an attractive price. I think Ethereum at 2,000 is ridiculous. So with everything that is being built on Ethereum, I think we can definitely go higher. Again, later on we'll be talking about BMNR, and I think when I talk about BMNR and I see the numbers based on what they have done this week, I can give you a better idea on what that price would be. Okay. But right now, if you ask me off the top of my head, if my cost basis is around 36, then you times 2, you're looking at around 72. So that's probably when I'll start to think about trimming. Whether or not I'll actually trim at that price, I really do not know. Because if BMNR gets to 72 tomorrow, definitely trimming. I might even trim like a bit more than 20% of the position. But if it gets to 72 by end of the year, then I might trim, but a lot lesser. So really, it depends on the momentum for me. Am I selling covered calls on SoFi or Amazon? Okay, right now in this portfolio, SoFi, I do not have covered calls on them. I really should, but because the last couple of days they got whacked by the short seller report, they were at 16. I thought that they would rebound pretty quickly after the seller report, so I held off selling covered calls. I should be looking to do that this week, especially if they regain past $18. If they can retake $18, then I believe I'm open. Amazon, I do not own the shares yet. I have covered call, I have cash secured puts on the position. I am thinking of just closing this early, or even if I don't close this early, just taking the risk of buying Amazon at whatever 210 or so, and then start selling covered calls on it. Okay, if you look at SoFi, this is like the golden retracement zone. Sorry, like I said, don't expect me to have all my terminology down to the T when it comes to the technical analysis. I know how it works. I don't remember all the terminologies and all that. Yeah, so I'm a primarily fundamentally driven investor. I have started to incorporate technical analysis in the past 1 year plus. So yeah, don't I'm just telling you what I think. Don't take my technical analysis as definitely not the best. Still learning. So for me, it does seem like, you see, this is a pretty strong bounce. This is the golden retracement, I believe, like 0.618. This is the golden retracement. We seems to be bouncing off here quite a lot. If we retake this 50%, then that's when I might look to sell covered calls. So I will decide when we reach around this level. For now, for this account, right? For my main account, I don't really care. I just keep selling because I'll roll it out. But because capital is a bit more limited over here, I want to be a little bit more strategic. Do I have thoughts on XRP? Unfortunately, not. Do not have thoughts on XRP and Solana. Haven't really looked into them as much. Uh, Primarily, I have Bitcoin and Ethereum. Yeah, I just know that some of my friends tell me it is not as programmable as ETH, but some of the legacy institutions trust them more. So I don't think it is a either or. I think both can survive at the same time. I think it really depends on the use case of each individual company. All right. So far for me, I might look to sell covered calls once I see a little bit more strength in this recovery. Past 18, probably. That's what I'm looking at. Then I will sell covered calls because I'm not too sure how nice is the covered calls right now. Let me just go and take a look. If they're nice, oh, might be pretty good. Implied volatility 65%, historical 44. If I go all the way up to 1st of May, what can I get? If you go to the 30 delta, it's around $20. You get 53 cents. Okay, let me calculate that. 53 cents. That's about a 3% return. It's not too bad, actually. All right. Is that Jezu? Do I pronounce the name Jezu? Jezu, you have just given me. Okay. I might just sell covered calls over here. Because, yeah. So far, covered calls, let's see. 1,300 shares. If I go out to the 1st of May, 39 days, $20. Yeah. I can get, okay, let's call it 52 cents. You know what? Let's do it. Sell. I'm greedy. I'm just going for the full 52 cents. And then let's just sell 10 contracts. Oh. Okay, let's see whether they get assigned. So I'll be receiving $520. I'm only putting up around 1,000 of the shares. So even if it runs and I miss it and things like that, perfectly fine, right? I can always get back in later because I still have 300 shares, so I will not have to FOMO. So with my main portfolio, I'm a lot more aggressive in how I sell covered calls and puts and things like that because I watch it like a hawk. I know myself that sometimes with this public portfolio, I'm a little bit more relaxed, especially if I'm busy doing research and stuff like that. So that's why I only sell covered calls on 1,000 of the 1,300 shares that I have. And yeah, so even if it get called away, I'll just sell cash account puts and roll again in that for the position. But I think, yeah, sometimes I can be quite unlucky when it comes to covered calls and puts. Like when I sold my $15 cash secured puts on SoFi, I never ever thought for a moment that they would be in danger of being assigned. And then the Muddy Waters report came out. Similarly, back when I had $24 covered calls on BMNR last month, I also thought that it was too far away, right? But somehow towards the end of the month, ETH stayed strong despite of the conflict in the Middle East, and we nearly saw BMNR at $24. Thankfully, we made it out with 100% of the premium in both cases. But yes. So I have just 1st of May, 39 days out. You get 3% for 39 days, right? You divide by 39 times 30. That's about a 2.2% yield. On a covered call, I think that's pretty good. Eric, I can tell you are pissed off. I'm pretty sure I've seen you be pissed off before. Why is BMNR always at 20? Because Tom Lee is giving you the opportunity to accumulate if you believe in the story. That is my simple answer. I mean, honestly, I hope it was higher. Do I hope it was higher? No, I still need to buy a couple hundred shares. So I personally won't mind it at 20. Right? I still haven't finished my entire position. But like I said, no hurry because the markets are weak right now. If the markets go down, BMNR will come down as well. But I think the good thing is that if you have seen over the last couple of weeks, although the conflict in the Middle East escalate, de-escalate, escalate, de-escalate, the price of Ethereum stays above around $2,000. Can you explain why 1st of May? Well, usually what I like to do is I go 40 to 45 days out, and then I close it I think 21 to 14 days, when there's around 21 to 14 days left on the contract. The reason for doing that is usually you get more theta decay the further out you go, so you can realize more of the theta decay. That's number one. And then when uh I was reading and watching videos on some people doing certain back tests, when you go out at around the 40 to 45 day mark, then that is when usually there's a lower chance of assignment. So it really depends. Like if I want to buy a company, like for this portfolio, Amazon and things like that, I want to buy, I don't mind getting assigned. I would go a bit closer for the expiry date, and then from there I will decide to sell a covered call, sell the cash to put, hoping to get assigned. But for here, because I'm just cash grabbing, I do not actually want to sell my SoFi shares at $20. I want as low a chance of assignment as possible, but still maximize the amount of theta decay. Oh, so you have actually followed Butterfly for over a year. That's interesting. That's interesting. So how do you hear about Butterfly? Jazz, I hope I answered your question. If I'm still not clear, you let me know. I can explain again. But I hope I answered your question. How do you find out about Butterfly in the first place? Anyway, I didn't realize the premiums for covered calls on SoFi is good. So that's interesting. Hopefully, those get assigned soon. Yeah, I think if you ask me this week, what I am looking at is to open a position in Hood and Zeta. Everything else, I am okay to just let it expire worthless. Because initially, okay, not initially, ideally, the strategy for me would be to anchor the portfolio down on one of these big companies like Amazon and Nvidia. But because of the price points that SoFi got to over the last couple of days, now SoFi has become kind of like the anchor position here. So it takes up over a 20% weighting in the portfolio. So technically, that means between Nvidia and Amazon, I am likely to be able to only buy one of them, right? Otherwise, the portfolio will be a bit too lopsided. So yeah, I'm willing to let those expire worthless and just wait. If you ask me, I can't really decide between Amazon and Nvidia. Last week, I would have said that Amazon over Nvidia in the long term, like the next 3 to 5 years, but Nvidia over Amazon in the next maybe 1 to 2 years. But if you listen to what Jensen said in GTC, he's expecting $1 trillion of revenue between now and what, 20, is it 28 or 30? That's insane, because I think most people expected $500 billion. And 500 billion would have been insane. So $1 trillion, I think. And the thing is, when it comes out of the mouth of Jensen, who has all the data, he's seeing the entire AI landscape. He's telling you how AI inference is developing. You just have to believe him. If you don't believe him, then there's nothing to say, right? Because he is the CEO of NVIDIA. And to a certain extent, this is why capital markets work. You can argue that Jensen is just trying to pump his stock, which in all, it could be a possibility that Jensen is indeed trying to pump his stock. But at the same time, if he pumps his stock and doesn't deliver, his net worth is also going to take a drawdown. So if we do not see Jensen selling, if Nvidia has continued to buy back their shares at these levels, then I don't see a reason why we shouldn't believe what Jensen is telling us. And if they do $1 trillion in revenue, which is exactly what I predicted Amazon will do over the next couple of years, then maybe there is still a lot of room to grow for Nvidia. And 170s is really, actually, to be honest, 175 was the place that I wanted to open my position. So right now, not buying, I'm just being a little bit greedy. Like if you ask me the safe play, I would tell you. If anybody asks me what to buy, I will tell you Amazon, because I think that is the safe play. But I think with Nvidia, there's a chance of a higher returns, but it is a lot more risk with the sentiment around the AI trade, whether or not it's a bubble. If you are not sure whether or not it's a bubble and things like that, these are things that scare you. Then perhaps this is not the correct investment for you. So that is exactly why I said earlier on in the stream when Lawrence was asking me about butterfly, I'm trying to make sure that my circle of competency, I'm very well studied in the area and that I can answer any questions around AI. So I am actually considering like upping my subscription for Claude so that I can do more on Claude Code and co-work and things like that, and really see how uh to really test some of these products to really see what is possible, right? Beyond just using it as an LLM. Happy Monday. Oh, is it 27? 1 trillion through, I mean, okay, 1 trillion through to 27. Let me just double check that. Oh, yes, $1 trillion of GPU orders through to 2027. Okay, you're correct. It's not 28. I think I might have mistaken that. So again, bear in mind, this is not $1 trillion of revenue per year. He's not guiding for that. He's $1 trillion of GPU orders from now to 2027. So this tells me that the AI trade really yeah, still has a lot of room to grow. And you're not going to go from $1 trillion of orders in 2 years to like zero orders. Maybe they maintain, but it's still going to be a couple of hundred billions of dollars worth of revenue. Yeah. So if you ask me, for the sake of this portfolio, I am technically leaning a little bit towards Nvidia. Now, what I might end up doing is to buy Nvidia shares so that I can roll my options on it. I think the covered call premiums on Nvidia are pretty good, if I'm not mistaken. And then with Amazon, I may just get 2028 leaps. Let me just go take a look at the portfolio. If I go in Amazon options, I do a call, go all the way out to 15 December 28. I sometimes I can be quite conservative. I wouldn't mind buying like $200 in the money calls for 2026. Although the returns may not be as nice as if you buy a $300 call, but yeah. So maybe somewhere in between. Let me see. Implied volatility, historical volatility. You see, so I also prefer to buy it when the implied volatility is lower than the historical volatility. Of course, now we are not too far away. It's like 33% compared to 28%. Yeah. So I think I might explore that, because if I buy a covered call, if I buy a leap on Nvidia, let's say I get 250, that's only going to take up $4,700 in capital. I think Jensen is definitely frustrated that people are not listening to him. I have just saved the interview that he did on the All In podcast. After this, when I'm at the gym, I'll be listening to that. Uh, do you guys use this? Let me share my screen with you. I don't think. Please do not take this as a hard and fast rule. This will definitely happen. Sometimes when you look at this, you can get a little bit too bullish. But this gives you a good estimation. So, for example, you get Amazon, and then you buy a call all the way 250. Oh, sorry, wrong date. 15th December 2028. So that gives you a fairly long time. Wow, it's nearly 3 years. Okay. So if you're like me, you're extremely conservative, you go with one of this. And even if you buy two contracts, that only takes you up to 9% of the portfolio. A lot more easy to manage compared to if I bought 100 shares of Amazon, it's 20% of the portfolio, and then another 100 shares of Nvidia. Oh, sorry, stock price range. All right. So if you followed the people are guiding $300 Nvidia by end of 26. So I'm just assuming, let's say we get to here. I think it is pretty decent because if we, you see, if you, okay, let's assume this is, yeah, you kind of still double your money as long as Nvidia gets to 340 by October of 2028. That's usually how I look at this. I just want to double. If whenever I use a leap, I want to double my money. And then I'll de-risk, which means I will take out my capital, leave the rest, and let it ride. But if I buy whether or not I can run a poor man cover call on Mumu, that's interesting. But anyway, I shall not sidetrack myself. If you buy a $250 leap, is it $250? Yeah, $250 call on Amazon, and it gets to 342 by, let's say, October, you still double your money. And so if you think about it, you buy M today at $212, you get to 342. 342 divided by 212, it's a 60% return. So if Amazon moves by 60%, your option gets 101%. So for me, pretty conservative. But like I said, that's how I tend to play my leaps because I have tried to go too far out of the money. So it really depends on how bullish you are. I really need to do a more detailed analysis on Amazon. Let me see. If I go further out, let's say we go 280. 280, then of course it looks better. I guess with 280. No. You see, with 280, by October of this is the risk, I guess, is the risk and reward. If you think Amazon can go up to $400, then by all means, right, get the 280. But sometimes I like to balance my risk to reward. So if I go 280 leap all the way up to December, by October of 2028, Amazon is up 60%, I will be up 75%. Not much difference, right? At this point in time. So it really depends on your own strategy over here. I think for me, the leaps, I don't really use leaps in a way where I'm trying to get a 10x on my money and stuff like that. If what I tend to do sometimes, I will do a spread where I, buy the call and then sell a call at a slightly higher price and get the spread. I tend to do that. I'm not the kind that will go far out the money, buy the leap and, hope to, 5-6x my money that way. So when I use leaps, I use it to boost my returns by around double, but I don't do more than that. So to keep it quite conservative and in a way that I think I'm quite a micromanagey kind of person when it comes to my portfolio. So I want it to be within a range where I feel like I'm still controlling my portfolio. Do I have a dividend play, Elijah? Yes, sort of. I use PIMCO bond funds. I'm quite lazy when it comes to that. There's also this one called Capital Group. I believe it is an American company. They have this like balanced American fund. They do a little bit of growth. They have a little bit of dividends as well. I'm not too sure. I think one of the things that I'm quite anal with, especially when it comes to funds like that, is that there are a lot of funds out there that likes to pay back your capital as part of your returns. And there are a lot of funds out there that are like that. Because you see their NAV actually eroding while paying you or maintaining a certain dividend. So these are things I'm quite anal about and I look out for very closely because that's actually exactly what I manage for my parents. They have a large enough sum of money that 5-6% kind of returns would do them would actually see them through their retirement fairly comfortably, and I just need to make sure that there is no NAV erosion as they pay out. So that kind of spread from the yield to maturity and the actual yield itself for the fund for PIMCO is actually fairly good. I think it's only a 0.3% deviation. So it's not too bad. So it's very slight erosion of NAV only during emergency circumstances. There's also another JP Morgan fund that I know that does pretty well for dividends. I can't remember what's the name of the fund now. I remember the yield to maturity spread is actually a lot tighter than the PIMCO one. The only problem is that they operate in the triple B to double B credit rating, so you are taking a bit more risk for that kind of return. Yeah, but you see, if you get Pfizer for returns and things like that, those are, what do you call it? Those are American companies. Then you get your dividends taxed. Whereas in Singapore, when you receive your dividends from PIMCO, you keep the whole 6% yourself. So yeah, I do have some small, yeah. So we do, like for my parents, we buy REITs, or I buy REITs for them, and then they have this PIMCO bond fund. Uh, what else do I do? So the dividend funds are not mine, by the way. It's my parents' one. It's just that I manage them as well. Oh, URL of the options page. Sure. It's options profit calculator. Let me. Yep. So for me, yeah, I don't really have any dividends play myself. I should possibly, okay, no, I am thinking of possibly allocating a little bit into dividends once my Weibo portfolio basically doubles. Which means once I'm at around 1 mil USD, then that's when I might start to allocate a little bit of it into, uh, yeah, dividend plays. I'm 36. I hope that in my 40s, I should have a big enough dividend income stream to, you know, yeah, at least supplement part of my lifestyle. So that's that. All right. So that is the leaps play. So this week, basically, for Amazon, Nvidia, and Iran, hoping to just let the options expire worthless. For Zeta and for Robinhood, I was looking at any possible opportunities to close the puts a bit earlier, and then just buy the companies outright and start selling covered calls on them. Again, like I said, in no hurry, because the S&P is still relatively, is still relatively in, and I would say I wouldn't call it no man's land as I called it a couple of weeks ago. But right now we are struggling. At least it seems like we're struggling to retake the 200-day moving average. I mean, I just noticed that BMNR is down so far. It's not as up as it was a couple of minutes ago. So I'm not too sure what happened. Did someone just say something again? Okay, very quickly, let me just share this with you. So you can see we are, I would say that, yeah, struggling. Nothing has changed. We're struggling over here at the 200-day moving average. We have a pretty high volume shelf in the 680s, 670 range. So I think it's going to be quite hard to break past that. Um, I am thinking that we actually come back down below the 200-day moving average again. Even if what Donald Trump said was true at the start, that they really did indeed have talks with Iran, it is in Iran's best interest to keep coming out and say that we are not talking to the US, because they know the more the more volatility they can create in the stock market, the more volatility they can create in oil prices, the greater the pressure they put on Trump and his administration. So you can see the reason, both sides of the story, both have holes to it, if you ask me. It serves Donald Trump to say that they are negotiating because it pushes up the price of the stock market and pushes down the price of oil. And it also serves Iran at the same time that they are not talking, even though both of them could already be talking. But the narrative that they want to paint in order to gain more leverage for themselves is that Trump has to keep saying, we are talking, so that oil prices will go down, stocks will go up. Iran has to say, we are not talking, so that oil prices can come up, stock prices can go down. So until we get clarity, not in a hurry. To me, when I will say that, oh, I'm willing to buy, although the prices are higher, is when I see a break pass. Yeah, break past the 50-day and a retest around this area, then that's when I will feel a lot more comfortable buying, even though the prices are higher. So for me, I would rather buy at a slightly higher price once I have confirmation on the trend rather than catch a falling knife. Of course, the only exception to this rule is that if it drops to between the 50 and the 0.618, and then that's when at this golden retracement, no matter what, I will still want to open a position over here. Oh, so you just came over from a mid show. Thank you for giving me your time today. I'm happy to help. How old is everyone else in the chat? Yes, I'm 36. I'm old. I think unfortunately in Singapore, like when I look at Amit, I'm very happy that he has started investing so young. And I say when I look at Amit as if he's so much older, so much younger than me. I mean, when I first started investing, I was like 26 going to 27, like late 20s. And at that point in time, I was still paying like $25 fees to execute a trade. And I was only buying Singapore stocks. So technically, I mean, unfortunately, the pandemic, unfortunate situation, but that literally changed my life because that really gave me the time to sit down and study this. Because I always be like, people in Singapore always felt like investing is gambling. Parents said that, my relatives said that, everybody around me said that. But I'm always of the belief that if some people can do it and do it consistently, like nobody, you see, the thing is, people tell me investing is gambling, but I don't see people winning 4D and Toto, which is like the lottery, every single week. Like no one can do that on a consistent basis. And if no one can do that on a consistent basis, that is gambling, that is luck. But from what I know, there are people consistently making profits, consistently, supplementing their income or even retiring early because of investments in the stock market, which tells me that it is not gambling. People just do not know how to do it. And thankfully, for me, I'm not saying that it's a good thing. The pandemic itself is bad, but for me personally, that gave me the time I need to actually just sit down and study this and, make sure I understand what I'm doing. Right. Okay. So with that, I want to talk a little bit about BMNR because they just released their report today. And well, we have gone on for quite a while. So I think it's about time I quickly talk about BMNR. I hope I answer most of your questions today. And then, yeah, there will be a lot of videos this year. Last year, I've been doing once a week. This year is going to be more than that. Yeah. There are a couple of things I have in mind, which I need a little bit of time to put together. That's why starting off with the live stream and then we'll build across as we get to the end of the year or towards the second half of the year. Yeah, because I think one of the things is that I got invited to teach about investing at two different places. So I will be creating material from that and also, recording it online so that I can like just double up the material. And yeah, I'll be giving everything away for free, by the way. I don't know if you guys heard about Alex Hormozy. I'm inspired by how he does things. Like I am of the belief that investing knowledge should be freely available to everyone. Unfortunately, we don't teach it enough in the Singapore school system. I believe listening to Amit and gang, they don't teach it enough in the US system as well. Everybody comes out there, tells you they have some stupid secret method that they want you to learn how to trade and invest and all that kind of nonsense and pay them $4,000. I am telling you right now, I am of the belief that if you are good at what you do not need to charge. That being said, of course, knowledge itself should be given free. If you want a person's time, that's a completely different thing. Okay, but I'm not selling you my time. I'm not selling, I'm giving away my knowledge. And I'm going to package everything for free. It's going to be about 6 to 8 hours long. So that is the project for 2026. Yeah, it's going to be a 6 to 8 hour long full breakdown on understanding investments, how I started, and all that. It's not going to be the whole just focus on cash flow, P ratio and all that nonsense. It's not going to be about that. Yeah, because I nearly paid $4,000 for one of those stupid investing costs. Literally, like I said, the pandemic saved me from paying that money. And after I learned it, I realized what the why are these people charging $3,000 to $4,000 for Google? And technically, even now, it's just it should only be worth $25 because you have Gemini and Claude for like $25 a month. Yeah, so I don't believe that this knowledge should be gate kept. And like Alex Hormozy said, make your free thing better than everybody else's paid thing. So that's the aim this year. All right. When it comes to Bitmine and BMNR, earlier on in the day, they were up nearly 2 to 3%. But right now, for some reason, they seem to be down around 0.7%. But not to worry because the fundamentals are indeed pointing in the correct direction. Now, last week, we spoke about how transactions are increasing. I think this week, what is front and center for most of us is the Clarity Act, because I think it's supposed to be passed in the middle of next week. So I think leading up to that, over the next 5 to 7 trading days, that is going to be the focus. If we do get the Clarity Act passed, I believe it will be good for the crypto industry. I personally do not think that the spike due to the Clarity Act will be as big as people think. Because if we are getting closer and closer to the Clarity Act, and there is news and rumors that it is going to pass, I believe some people said that we seem to have gotten some sort of verbal agreement. People are already going to start to price that in. So, which is why when the announcement itself comes out, I don't believe that the rally will be very long. We might have a couple of days of rally, but probably that's about it. But I think if we are starting to see and hear things that come out that say that the Clarity Act is coming together, then leading up to the announcement, that's when we're going to see the rally. So do pay attention to this space in the next couple of days. With that being said, I think as long as the Clarity Act is being passed, as long as we have certain regulatory frameworks on how to use stable coins, then I think there is no problem in the long run about the price of Ethereum. We don't need to expect a big push and a big spike, because if you understand what the Ethereum network is trying to do, they are trying to make Ethereum even more scalable and even more decentralized than it is before. That's the very layman way of putting it. What they're basically trying to do is to lower the gas fees to such an extent where they can process millions and millions of transactions without raising the gas fees too much. So while the gas fee burning off the Ethereum through the gas fees and all that, that's a good thing. But once it gets too expensive, people cannot use it. It is detriment to the overall ecosystem of Ethereum. So it is a kind of balance where you want a lot of people using it, burning a lot of gas fees, but also not so expensive to the point where it gets too it gets too ridiculous. So can Ethereum get to uh $10,000-$12,000? Perhaps. I wouldn't be surprised, but I don't think that it's going to be a 26, 27 kind of thing. Right. Jess is asking, why is everything going down? Very simple. Someone said something. Really, this evening when I was preparing for the live stream, I saw everything go up. I immediately said, someone said something, and I was right. Trump said something, right? And then as I was having dinner, somebody else said something, which is Iran, and then that's why everything came down. Wow, so many of you are so much more experienced than me when it comes to investing. 56 years, 96.com, great financial crisis, everything. Wow, impressive, Lawrence. All right. So with Bitmine, I think, like I said, we are not expecting. Like for me personally, I will not be complaining if we pump for weeks and days, and this is really the V-shaped recovery, and Ethereum gets back to $4,000 in the next 2 weeks. I'm not complaining that if that is happening. Okay, don't get me wrong. I'm just saying that I'm not expecting that to happen just because of the Clarity Act. I think this is something that will be a slow grind over time because they are trying to build the ecosystem in a way that they can handle a large amount of transactions and while still maintaining a pretty reasonable fee. Now, if that were to happen, of course, naturally with demand, the price of Ethereum will naturally go up. I'm not actually sure how the unit economics will work. Tom Lee keeps saying $65,000, but the only thing that he's basing it on is the ratio of ETH to BTC. But if you are looking at it from the burn rate, I think a more reasonable number, at least to expect in the long term, is around 10 to 12,000. That is for me. When I work it out according to burn rate, because when you work it out according to ratio, you can just put any number you want inside, and it can be as high as you want. Which is why, although people say that that is the best way, I do not actually think that that is the best way. That is just one of the ways to value Ethereum. But we will see. Okay, so with Bitmine, this week they have increased their staking position just by a little bit. I believe last week was around 3 million Ethereum staked. This week we have 3,142,643 Ethereum staked, representing $6.5 billion at around $2,072 $72 per Ethereum. And Maven's staking solution is still on track to launch in the first quarter of 2026. I'm surprised they haven't really changed that verbiage because it is already 23rd of March. So there's only another 8 days left to the end of the first quarter. So I'm expecting at least an announcement anytime in the next 2 months or so. So right now, Bitmine owns around 3.86% of the outstanding circulating supply of Ethereum, 77% on the way to their alchemy of 5% in just 8 months. If you add the cash that they have on their balance sheet, I believe it is going to be above 80%. We'll take a look later on. Right. So we already know that they increased their investment in Ops last week. Ops took that money, reinvested it into OpenAI and Mr. Beast. I'm going to ignore this portion because I don't think they are the only publicly listed equities to give investors direct exposure to OpenAI. I think Microsoft as well. Prediction markets see a 68% chance, as we're just talking about, that the Clarity Act is signed into law in 2026. Actually, this is a slight decrease from what we saw last week. Last week, it was 72%. Now it's just 68%. But either way, bear in mind, they're not saying 1st of April. They're saying sometime in 2026, right? So let's go down. It's the 101st most traded stock, around $1.2 billion per day. Perfectly fine. All right, let's see. Okay, as many have noticed, crypto and particularly Ethereum have outperformed the broader market since the Iran war commenced, with Ethereum rising 18%, outperforming equities by 2,450 basis points. Let me zoom this in a little bit. I think this might be easier for you guys to see. So at scale right now, let's see, where are we? Okay, in the past week, Bitmine acquired 65,341 Ethereum compared to an average of 45 to 50,000 per week prior to that. Very straightforward. Then right now, they have 3.1 million ETH being staked, and the staking reward is around $272 million annually, right? So just under, then $100 million short of their $365 million, where they can claim $1 million every day. All right, here is where this is interesting. So last week we saw that the CISA ratio, it was around 2.81, 2.79, sorry, and their staking operations generated a 2.81% yield. Right now, this is one of those weeks where the spread is slightly larger, 0.08%. So again, like I said last week, while having a big spread between what their actual yield is compared to the CISA ratio, gives them room to offer rewards to attract institutional clients. But institutional clients are not just focused on receiving that couple of basis points of rewards. I think what they're really focusing on is the security that Bitmine offers, as well as all the safety protocols, as well as being transparent and an audited source where they can go and stake their Ethereum. So I think this is exactly why Maven is here right now. I believe if you look at the iShares, the BlackRock ETF, they are staking through Coinbase. I'm not too sure what is Maven's staking yield compared to Coinbase, and whether or not there's a chance that BlackRock will eventually use both Coinbase and Maven to stake their Ethereum. This is something that we want to take a to keep a close eye on, and to see whether or not Tom Lee and Bitmine can start to get more and more institutional clients onto their Maven platform, and how fast they can scale their Maven platform, because this is going to become their third source of revenue. So they have their first source of revenue, which is the capital appreciation of the Ethereum on the balance sheet. Second source of revenue directly from staking, which usually goes into buying back more Ethereum, as well as the third source of revenue, which is from Maven, right? So from here, you can see that, let's see, where did they talk about their cash on hand? Am I missing something? Okay, sorry, it's over here. So They have 4.6 million ETH tokens, total cash of $1.1 billion, right? So that means they actually use around $100 million in cash, right? $100 million in cash. Okay, so let's go to our spreadsheet. I'm sure by now you should be pretty familiar with the BMNR spreadsheet. I will not spend too long explaining every single section. So over here, we are going to go down into today is 23rd of March. 23rd of March, how many Ethereum are there? Let's take a look. 4660903. 4660903. Okay. So if I drag this down, you can see, oops, that they bought 65,341. Oh, again, I keep forgetting that when I do this, I need to zoom in for you guys. Okay, let's zoom in here. I realize this will do. All right. Okay, when you take a look at the ETH on their balance sheet, they have 4,660,903 Ethereum. They bought 65,000 Ethereum this week, slightly higher than what they were doing in the previous weeks, but not that much significantly higher. I think last week I was hoping that they got to 70,000 this week. But at the moment, I think with the kind of volatility that we're seeing in the Middle East, plus the fact that, I think last week Ethereum's price maintained or stayed relatively stable, while Bitmine actually came down. I think because of that, they were trading below 1x MNEF for a couple of days last week, which is likely why they are not able to raise as much cash. Now, as a result, you can see that they had to dip into their cash balance to buy more Ethereum, which is why you can see that you can see that they use 100 million of their cash on hand. Now, what you need to take note of is if they use $100 million of cash on hand, which means that when you count whatever capital that they raise, you do not need to count the amount that they raise for cash. You only count the amount where that they raise to buy Ethereum. Now, okay, so what happens? I'm going to explain this to you. Usually, I'm just going to drag this down or copy this, paste this over here. All right. So what you're going to see is, let me see. You know what? Let me just work it out. They bought 65,000 Ethereum multiplied by this price. Okay. This is the amount. So they spent about $142 million buying Ethereum, but yet at the same time, okay. So my formula was correct. So they spent 142 million buying Ethereum, but out of this 142 million, $100 million came from their existing cash on hand, which means they only issued shares on, which lines up perfectly with what we were talking about with the MNEF story that we are exploring last week. We were saying that the net asset value the MNEF came down below 1x, gave them lesser opportunity to raise shares. So because of that, they only managed to issue $42 million worth of shares, and on an average price, where is my, let me see. Right, I hope you understand what I mean, because if they already have the cash on hand, although they spent 142 million to buy Ethereum, the 100 million came from their cash. So it means that they only issued shares to raise $42 million in capital to buy Ethereum. And when you take a look at the historical data, let me share this over here. You can actually see that the weekly price of Ethereum last week, 23.85, and 2022. Okay, so if I go back, 23.85 plus 20.22, you take this, you divide by 2, is around $22.04. Okay, and you drag this down, you realize that they only issued just under 2 million shares last week. Did Tom say anything about March 19th being the bottom? I don't think he said anything about March 19th being the bottom. he says that exactly what is written in the disclosure today, that they feel like they are coming to the end of the crypto winter, which is why they are slowly accelerating their pace of buying. But again, I think when you are out of the crypto winter, that is when you can really see them buying shares in the hundreds of thousands. Okay. So again, I'm not too sure what is their long-term goal right now, whether or not they plan to get to past 5 million Ethereum. All that will be answered in a couple of months' time. Now, if I go back to the valuation over here, let me just zoom this in a little bit. You can see, again, I always like to zoom into the formula. We have been adding every single week. So this week is around 1.94 million shares. So with that, you get the total number of shares that they have on hand. Right now, Bitmine is trading at around $20.65. So you can see below 1 times MNAV. So again, if this happens too consistently, they have to dip into their cash holdings, which thankfully for us right now, right, with their cash holdings of 1.1 billion, they are pretty well capitalized, and we do not have to worry about them diluting shareholders. Okay, I think if they do not have any cash on hands, then they become like some of the other treasury companies out there that cannot buy during this dip. Then, like, what's the point? So you see, if a treasury company cannot buy Ethereum during the dip, then what's the point of me buying the treasury company? I know some people are buying SBET and things like that. They say that they can recover. You're buying it at a discount to its net asset value. I think this is a bit different, because the reason why you buy a digital asset treasury is because you want them to keep buying Ethereum when you can't. So for example, as a retail investor, when I buy, let's say $50 of SBET, I'm hoping that they use that $50 to, in a sense, go and buy Ethereum in that sense, right? But at the end of the day, if they're not able to do that, then I might as well just go and buy Ethereum myself using the $50. All right. So with their ETH holdings now at 4660903, if I'm not mistaken, 4660903, price of Ethereum, okay, 1100. So you can see current net asset value per share is around 2130, which is where we were actually at just before now. I really do not know what's causing the. We were at $21. Literally just a couple of minutes ago. We were at 2179 at 10 a.m. So that's 2 hours ago. So 2 hours ago, we were above 1 times MNAV. Now we are not. So again, like I said, not too sure what happened in the last hour or so during the live stream, but we'll take a look. I think right now you can when I take a look at the chart on BMNR, there is a pretty heavy volume shelf in the $28 to $30 range. So which is why I think that's probably where we are going to see the greatest resistance. And once we break past $30, then I think that's when the real recovery will start. So all this is dependent on what Ethereum does over the next couple of weeks. Okay, so from here, you go on to the rate of accumulation, starting from 30th of June to 30th 2025 to 30th of June 2026, 50% margin of safety. Again, right now, just to show you this times 7, you end up with around 61,000 shares. So again, maybe the margin of safety, time for me to lower it to 45%, because they're accumulating 65,000 shares. So if I lower the margin of safety to 45% at a rate of accumulation of 9,601 Ethereum per day, per week, they're accumulating around 67,000 Ethereum. And if you consider that they just accumulated 65,000 Ethereum, I think this is more or less the kind of rate that we're expecting them to keep up until 30th of June. Now, by then, by 30th of June 2026, in 98 days, they would have 5.6 million Ethereum on their balance sheet. And if Ethereum goes back to $2,400, we are seeing a projected net asset value of $14.5 billion. Staking yield, again, I am just assuming if you have 5 million Ethereum, you should be staking around 4 million, which is why the 4 million is over here. Okay. The staking rewards is based on today's price. All right. So, of course, if this is high, if Ethereum does get back to 2,400, naturally the staking rewards will come in higher as well. Again, no Maven revenue. Bear, bull, base case, everything stays the same. No difference. In this particular scenario, with Ethereum at 2,400, bear case $21.45, base case $28.61, bull case $35.95, which means the price target by 30th of June should be around $28. That is exactly when we will be starting to test the upwards resistance between the $28 to $30 range. And if we can break past that, then of course, I think then that's when we can say the rally will have legs and can carry on for a longer period of time. Now, earlier on, someone asked me when I plan to sell my BMNR. I plan to sell my BMNR. If you're talking about the entire position, unlikely to be anytime soon. If you're not talking about if you're not talking about if you're talking about when I plan to trim BMNR, that's a completely different story. If we get to 4,500 Ethereum, right? Sorry, $4,500 per Ethereum, which means assuming that by then we will not be in such a bearish market, then I think, perhaps we are likely, even then, I don't think 4,500 Ethereum is when I'll be trimming, because by then that means that Bitmine will be only around 51. I said 72, right? So 72 would have to be how much? 6,000? I think when Ethereum, so basically, I will think about trimming only after Ethereum breaks an all-time high, if that answers some of your questions, because some of you were asking me, when will I trim Ethereum? I said around $72. Okay, so this is close, right? Ethereum between 6,000 to 6,000 to 6,500. That is probably when I'll start trimming 10 to 20% of my position. Hi, Harpreet. Nice to have you here. Nice to have you here. So I hope that answers your question. Okay. About what we plan to do with the portfolio, about how to think about the conflict in Iran today. Do I think Maven launch will be a catalyst? I think it depends who are the institutions and who are the partners that are there with them and what kind of revenue and margin it generates for the business. Because right now everything is only an assumption. I think once we get the first couple of customers in, it's going to be like SoFi's loan platform business. It's going to take a few quarters for the markets to figure out how to price this, because BMNR is literally the first of its kind out there today. Even MicroStrategy, they are just holding Bitcoin. There's nothing else. With Bitmine, there is their net asset value, there's the staking yield, and then now they have Maven. I think it's going to take some time for the markets to price in all three revenue streams. If you do a sum of parts analysis, naturally you will come to the conclusion that they are very, very undervalued. But I think what tends to happen is that when you take a look at companies like Google, like Amazon, although when you look at them on a sum of parts basis, it does seem like they're extremely undervalued. It will take some time for the market to recognize its value and truly price it correctly. So although it is, if you use the sum of parts valuation, you may see like, oh, the net asset value is worth this much, staking yield is worth this much, Maven is worth this much. You put everything together, that doesn't mean that the market will price it correctly that way. Yep. All right. And so with that, I will bring the stream to a close. I will be on again on Wednesday. Hopefully, we will get a little bit more clarity around what is to happen. I hope there is going to be no escalation at all. I will do up the spreadsheet in Excel around the public portfolio and talk to you guys about that on Wednesday, about what I've decided to do, whether or not I'm going to buy leaps on some positions and things like that, and whether or not I've decided to open a position. But right now, from what I am seeing, the rally is not exactly very strong. There is an initial rally, but I think people and markets in general do realize that there's a lot more. I think there's a lot more room to go before, or there's a lot more discussions and a lot more. Basically, there's really a lot more uncertainty left in the markets before we can actually say that we have truly priced in, or truly priced in the conflict, number one, and truly have said that we've gotten to the other side of the conflict. Because if I take a look right now, I believe the S&P 500 just showed the daily candle just turned red. I don't know if there's any like technical analysis genius in the chat, but apparently this is supposed to be bearish, right? Because it shows that buyers came all the way back, couldn't sustain, the sellers pushed them back down, some sort of hammer or something like that. I don't know. Like I said, don't listen to me for technical analysis jargons. I can't remember everything. I just know how it works. When you see this kind of handle, downwards, usually it shows a bearish signal. So likely tomorrow, over the next couple of days, we are likely going to see a retest of this key area. Again, if it doesn't hold, I am thinking there is a likelihood, or at least I am prepared. Okay, again, context. When I say this, I only am about less than 10% in cash. 8% of my portfolio is in cash. Talking about the main portfolio, I'm not talking about the public one. The public one I just started. So I am technically I have zero cash in the public portfolio because it is fully collateralized. So it's just there so that I can, in case I get assigned on my cash account puts. Main portfolio, I have around 50,000 in cash of the 600,000 that I started with. So slightly less than 10% in cash. So bear in mind when I say this, I'm not hoping for a crash. I'm not saying that it will crash. I'm just saying I have cash in case for a crash. I'm looking to deploy anywhere between this area, this yellow and purple area, which is why I made the colors so outstanding. So every time it gets there, I'll remember, oh, this is the buy area. Sorry, let me just change this to white. I don't know why it became blue. All right. So I wouldn't be surprised actually to see this at least test the 3820 line. And then from there, if we get a bit more clarity about the conflict, perhaps we'll see a rebound. Otherwise, I have told people around me that I like I like DCAing at these lines over here. So 612, 586, and 560. Do I think we will get to a 560? Never say never, because that's exactly what happened on Liberation Day. If we get some kind of nonsense that is as bad as Liberation Day, like I said, never say never. But I'm not going to miss a dip buy opportunity. So I have certain levels. The close is going to be very important. We need to finish strong, and the lows of last week are important if we break them. Yes. Yes. So I have covered calls on the entirety of my main portfolio. If I can just show you guys, I don't know if I showed the SoFi one just now before. You see, this every time I say I'm ending, it just goes on for another couple of. So my entire SoFi portfolio, SoFi position is covered. I have 15,000 shares. 3,000 shares, 17th of April, $19. Very aggressive, I know. It's not that I don't think it can get back to $19. I'm like reverse psychologying the market. I'm daring the market to bring SoFi to $19. So if SoFi recovers, all of you should thank me. It's because I sold cover calls at $19. So I'm forcing the market to recover because it always does the opposite of what I want. So I'm helping all of you save your portfolio by selling covered calls on 17th of April at $19 for SoFi. Okay, I'm taking one for the team. No, but honestly, if it gets close, I will just roll. I'm not going to complain, right? If SoFi gets to $19, sure, I'll just roll. Then I have $20 again for 1st of May. You see, I am literally, I'm selling really aggressive cover calls. So I am receiving quite a lot of premium. You can see over here, the premiums I receive are around 1,000-ish bucks each time. I mean, yeah, you can see over here. Yeah, granted, I bought it at 39 cents, 43 cents. Basically, 1,000 plus here, 51 cents. So I'm getting close to a 40. So I'm getting close to around $2,000 in premium. So 1,100, 2,000, and then this is basically right on the money. So another 1,000. So I received basically $4,000 in premium, so that all of you can see your SoFi recover to at least $19 to $20. Oh, right. Food Panda. Oh, so many things I forgot. Okay, wait. Before Food Panda, when should you trim some share? I'm not too sure what you're talking about. If you're talking about BMNR and SoFi, not anytime soon. I already trimmed my SoFi shares last year at around $28. And then and I bought back more. So I trimmed, I left around 8,000 shares, I believe. And then I bought back until I have 15,000 now. So yeah. Not in a rush to trim again. I don't need the money right now. You will always roll, right? I mean, until I get to a price where I want. Obviously, I don't think SoFi is a $20 stock, right? If I can roll all the way to 40s, that would be the best. I will be happy to sell in the 40s, some of it. But if you want my thought process, I am not selling SoFi before it gets to 35. That is for sure. I'm also not selling BMNR before it gets to 50. That is also for sure. So until those price points, I will always be rolling. Right now, like I said, because of where the market is, I am being extremely aggressive with my covered calls. I've done this for around 2 to 3 years, so I already roughly have an idea how it works. Which is also why I keep a little bit of capital in the portfolio. Should I ever need to use the money to buy back these positions to roll? Because with Webull Singapore, you can't do it on margin, which is quite irritating. Harpreet, I really wish you well. I mean, I've done something like that in the past, didn't work out for me. Like I said, I think last week I was showing my parents' portfolio. I got into Palantir earlier than my parents' portfolio. So I bought Palantir first. I felt it did well. Then I went into their portfolio and bought it for them. But yeah, as you can see, concentrating works well sometimes. So I hope with BMNR, it gets to $100, $120 for you, bro. Am I not holding SoFi long term? Why is 35 a sell? Oh, sorry. 35 is not a sell. 35 is a trim. At certain price points, I tend to trim a little bit, take some off the top, de-risk the position so that I can build up my portfolio. I personally do not think that uh, a portfolio of this size, I want to have actually like public portfolio aside. You can't look at what I'm doing in a public portfolio as a representation of how I will build my own portfolio. I like to have at least $200,000 in a position, and I like to have 3 to 5 high conviction positions at any one time because that is what I can really keep my eye on. The public portfolio at the same time is also partially for people who might be a little bit newer to investing, and also for me to document down how I research companies and my thoughts and things like that. Because I know myself, if I don't have any money in the company, I would spend all my time researching the companies I have money in. So in a way, it's like forcing myself to be a little bit more on the ball with my research. It's similar. I mean, I trimmed SoFi at 28. So when SoFi was at 28, I trimmed a total of like 3,000, 4,000 shares. I left 8,000 shares. And then in the end, when the pullback happened, now I'm back at 15,000 shares. So I have even more SoFi than I had before I trimmed. So, like I said, in the past, I was very dogmatic about it. I was like, no, I am a long term holder. I will never sell any shares. And then all that got me was 2 years where, I just sat around with my 50% losses while the market rallied. So I've decided to be a little bit less dogmatic about it. Over time, you also learn, you also grow. I'm old already. So, that's why I'm a bit more objective about this. I have 15,000 shares. I would say that at any time, I am going to hold at least 10,000. I'm comfortable to trim up to 5,000 shares, which is around one third of the position, to reallocate it into something else. Because if you think about it, if SoFi gets to $40, 10,000 shares is $400,000. At that point in time, it makes sense to take out 5,000 shares, which is $200,000, and at least open another position somewhere else. And yes, so this is something that I really have learned over time, that you should really trim. When I first started investing, when I was like 26, 27, people tell me you must know when to trim. I'm like, I'm a long-term holder. I don't need to trim. I'll trim it in 30 years when I'm in 30 years time when I'm retired. That's how everybody starts. That's how everybody learns. That's what I can say. Have you seen Amit's meetup website? It says he'll come to Singapore in June. Yes, I have heard him say that on live stream a couple of times. Hopefully, I get to meet him in June. I should be able to free up my time whenever it is. Yeah, I mean, thankfully, with what I'm doing now, my time is pretty flexible. Which one am I trimming? BMNR. I have certain price points. Honestly, with BMNR, I haven't really thought about it. I don't think about the BMNR share price directly. I tend to think about Ethereum. So as I was showing just now in that valuation, probably Ethereum at I'll be very honest, the BMNR position is a little bit bigger than what I had expected it to be. Only reason for that is because it kept going down. So I kept buying from $24 down all the way. So I ended up with nearly 200K inside it. which is not where I wanted it to be. I was hoping that it was only 120 or so, 120, 150K. So that is the one where I may start trimming a little bit earlier, 50, 60. But ideally, because how fast Ethereum goes, right? I'm actually, in my mind, I want to trim at 72, but if it's a slow grind upwards, then maybe at around 50, 60, I might take some off the top. Because like I said, I want to diversify this main portfolio as well. I would like to buy companies in the cybersecurity space. I would like to get exposure to Circle as well. And Circle, I'm looking at it probably in the 90s to $100 range. Oh, yes, of course, I have made a loss. Who haven't made a loss in BMNR unless you bought in the last couple of weeks? My cost basis is like 38-ish. Yeah, 38.90. And then if you account for the premiums, I believe it's like 36.50 or so. So I'm down around like what's that? 40%? Around 40%. Yeah, so that means our cost basis should be pretty similar. Right. So, but anyway, in terms of, I am all for concentrating your portfolio, but concentrating your portfolio is, to me, 5. It depends on your on your comfort levels. You don't have to do what I do. I like to do 100 to 200K per position. If you have a smaller portfolio, you can do 10 to 50K a position, and then you just scale from there. Because I didn't start off with like, I mean, you can see if you include the loss. Okay, you can't see. That's why I say this portfolio is a bit hard to understand, because technically, if you look at my withdrawals, I've made more than this 500K over here, because I start off with 600K. But at the end of the day, I usually like to have around 100 to 200K per position. I started off with a 100K portfolio, and that's how I started learning how to invest. When I was doing that, initially I had 17 positions, 100K, way too much. Then I went all the way to just 2 positions, Palantir and SoFi. And then from there, I went to 1 position, which is just SoFi, and I realized that was the wrong decision, because when the market went up, I really learned the meaning of, Warren Buffett saying the market can stay irrational longer than you can stay solvent. And so during that point in time, thankfully, I was still working, running my tuition business, so I could get by. Because at that point in time, I haven't started doing options back in 21, 22. So I would caution against going all into one stock, unless, of course, you are young and then you're studying. You really do not need the money. But if you are the kind that you need to survive on this money, then I would say that there's a fine balance in between 1 and 17 stocks. Like 17 stocks, too many. 1 stock, too little. I say, to me, 5 to 7 is a comfortable balance. Hey Bob, everybody got to start from somewhere. I started with 2,000 in the account back in 2017. And I bought this, let's see whether I can find it over here. This is a Singapore company. I bought this company. It's called VCom. It's in Singapore. It is basically one of the major car repair company kind of things in Singapore. And you can see it doesn't really move. So if you bought it in 2020, I think that's the stock split. You can see it barely moved throughout. So back when, I would say that for a long period of time, I thought that investing, does it work? Does it not work? And after that, someone told me, no, you're in the wrong country. You're in Singapore. Singapore is not for growth and all that. And then that's when I started opening my eyes to the US companies and all that. Right. And so, yeah, I think it's good to have more than one company. I think 5 to 7 is a very comfortable level. So I just realized that I can do this. Trade markings. You can see I sold Palantir 187. I sold Palantir 132, and I made a first trim at around 75. And then when I bought Palantir, it's like all the way here, like 11, 20. So around, my average was around like high teens, you can say. I can't remember. I think the average here was around $18. So I had like 600 shares of Palantir in my parents' account. It did a lot better than me. Whereas for me, once Palantir doubled to 24, I moved it all into SoFi. So from this particular lesson in my parents' portfolio, seeing Palantir go all the way up to 185, I've learned, you know what? Some diversification works. Dude, what time is it in Singapore? It is 12:30 a.m. I'm going to go to the gym for a short while and then I am going off. You see, every time I say bye, you guys ask me questions and then I kind of stop talking. All right, I really got to go now. Yeah, it's tragic for me. I mean, it's good for my parents. They have never seen such a big returns before. Especially my mom. My mom always used to think that investing is gambling, and she cannot believe that she basically 13x their money. Right. I'll see you on Wednesday, guys. Thanks for hanging out.